in today's environment, with things being as tough as they are, I think brokers need to focus broadly when trying to find client solutions. Historically, I think the focus has been on property. What property does the client have, and how can that property be used as security for a loan? But once you dig a bit deeper and get to know your client, a broker would find that in many cases the client has other assets. And in the valuable asset space, it might be things like gold, jewelry, diamonds, artwork, antiques, cars, luxury watches, those sorts of things. And the reality is there are lenders out there that will recognize that sort of collateral, valuable personal assets, as collateral for loans. And I think it's something that brokers definitely need to look at in terms of being able to service the clients more broadly. So personal asset finance is really a complement to the traditional property-based solutions that brokers generally look to when trying to solve client problems. When we think about personal asset finance, there's three key attributes which we think differentiate it. The first is the concept of accessible. It's accessible. It means that there's not a lot of red tape between the client and the loan. There's typically no income checks or credit checks. The loan's purely based on the value of the asset, and it can be got by the client pretty quickly if they need to. The second is the concept of flexibility. A personal asset loan is flexible, and by that we mean a client is not forced to borrow a certain amount of money for a fixed period of time. They can borrow less if their needs are less, and if they want to repay early, they can do so typically without a penalty fee. And the final concept is fast. The turnaround times in personal asset lending are very quick. Generally, a loan can be funded same day, provided the client can get all the documentation together. We don't think so at all. If you think about it, when someone comes to you with an asset that they already own, that's actually the purest form of credit check you can get, the fact that they own the asset. We like to draw this distinction between mortgaging your future versus banking your past. If you take out a home loan, what you're really doing is committing to a series of mortgage payments, sometimes for as long as 30 years, and you're backing yourself to have to make the payment month after month, year after year. So that we think about as mortgaging your future. When you unlock equity from a valuable personal asset, you're really banking your past. You're taking something that you already own and you're unlocking equity to free up some capital to do what you want to do with it. So we really don't think that's the case at all.